If there is profit and positive impact in sustainability-focused banking, why aren't all banks doing this? Global Alliance for Banking on Values, who say they have proved the connection, asks this very question. Dr Marcos Eguiguren from the Global Alliance joins me now. Marco, what exactly is the business case for the growing value-based banking movement?
Putting people before profit. This is something that many others claim to say, but it's not that easy to do. Putting people before profit means that profit is a consequence of what we do for society. That's why the Global Alliance for Banking and Values and the 28 banks in the alliance are banking only on real economy, never on speculation or financial economy, paying special attention to triple bottom line loan and assets. So those loans that are good for the environment, good for society. So this is a real different way of banking.
Isn't this just sort of a form of CSR?
So not at all. Because actually, what companies do in CSR is basically taking a part of their profits, normally a small part of their profits, and devoting this part of their profit, to social opportunities or to environmental projects. But we normally find two classes of CSR. The ones who are practicing genuine CSR, but then you've got many others who the only thing that do is greenwashing. But in our case, it's not like this, because CSR, we do not really talk about CSR in our banks, because everything we do is CSR. We pick the whole balance sheet of our banks and invest in things that make sense for society.
Well, just give me examples of how this method of banking is different from traditional methods.
We do only, when we give a loan, of course, as many other banks, as most banks do, we have to look at the solvency and the capacity of repayment of the borrower. And obviously we do it. But we only perform a qualitative assessment so that we really go in depth into what does the company or the project need the money for, whether this project or company is doing things that are positive for society or positive for the environment, and also in difference with many other banks. Banks from the Global Alliance devote an incredible, very high amount of their assets to real economy. Just to give you an example, as an average in the last 10 years, 80% of the assets of Global Alliance members have been devoted to loans to the real economy. If we compare it with what systemic banks have done, so which percentage of the assets they devote to loans to the real economy, it's less than 40%.
But banks, of course, aren't charities. So is this sort of model profitable in the end?
Taking the banks of the Global Alliance in a period from 2003 till 2014, our return on assets has been slightly bigger, higher than the return on asset of the systemic banks, 0.7%. While systemic banks have had a return on asset of 0.6. At least the same return, sometimes a little higher, but very much less volatile than systemic banks.
So can this model be applied to investment banking as well?
In theory, yes. But I really don't believe it. There's a big difference between retail bank and investment banks. And basically, as you know, the difference is that retail bank, we take deposits from the public and we invest these deposits into, in the case of the Global Alliance banks, to the real economy. But investment banks do not do it like that. So they do not take deposits. And I feel that taking deposits makes a real difference, because taking deposit really allows you to be in touch with the ones who save and the ones who are really, making their money, working, doing business or whatever. And just pick this money and invest in the real economy. In investment banks, this is not the case. They just borrow the money, from institutional investors and from many different sources and invest in the real economy. So there is something important that's lacking in investment banking.
You say that following the 2008 financial crisis, banks that put people before profit have gained recognition and are growing in strength and number. But as the economy is gaining strength, it's almost human nature for people to forget this and start focusing once again on the money. What do you make of this?
I hope not, but I cannot be sure. Our intention, the intention of the Global Alliance banks, as I mentioned just some seconds ago, is to keep on banking this way, to keep on helping the depositors also to understand that the usage of money is much more important than just, getting some interest rate in reward of my savings. That it really makes a lot of difference where my money goes, because where my money goes is what makes the world go round.
Finally, how much has the role of regulation played in sustainability?
In the case of regulators, they haven't played that role so much. However, something is changing. And in the last 2 or 3 years, especially, some of the regulators in the world are really making some steps in that area. Most of the regulators that are starting to think about, from a regulatory perspective, pushing for sustainability, making more interesting for banks to invest in those kind of projects that are environmentally friendly or socially friendly. This sort of initiatives are coming not so much from the developed world, but from the developing world. So we see some examples in Peru, we see some examples in Brazil, we see some examples in Kenya, in banks of that area. It's starting, in some cases only 1 or 2 years old. In some cases like Peru, there is a new supervision that was approved this year, but it will go into force in 2016. So I think this is going to be, playing a growing role, but we're not there yet.